The collapse of, I'll take that again because it's just the day it is. The collapse of FTX, the third largest cryptocurrency exchange in the world, crowned a difficult year for cryptocurrencies. For many, it highlighted the urgent need for a coordinated worldwide strategy to crypto regulation in light of the rapidly developing status of crypto assets as an alternative asset class. New demands for tighter consumer protection and regulation of the cryptocurrency business have been made in response to the FTX crash and subsequent decline in the prices of Bitcoin, Ethereum, and other important crypto assets. Ola Atose, founder and CEO of KoinKoin Exchange, joins me now from London in the United Kingdom. Ola, this conversation has been one we've been having in different ways throughout the past year or so, but the big topic for today now is 2023 really the year we see crypto regulation? So let's start with this. 2022, of course, we saw crypto have a very difficult and volatile year as well. But interestingly, we saw it also react to bank interest rates, U.S. Federal Reserve interest rates, and many said that this was showing its link to fiat currencies, and that in fact there was actually having cryptos not being exempt from external factors, as has sort of been a tagline in previous times. Do you think that crypto demystification has now started? Is it see finish time?
I'm not sure about that, but thank you very much for having me, and of course, a happy new year to you too. Like we've said, or like I've said specifically for at least a year now, regulations are needed, and regulations are needed for a number of reasons, least of all the FTX saga, which took place last year. And now in 2023, a number of different regulators around the world who were already offering some sort of regulation and now sort of, doing more work, paying more attention, to the digital assets, obviously that sector or subsector, if you like, of currencies or assets, pay more attention. And now there's a view that regulations are needed. So, I think, for those of us who have an understanding of traditional finance, we welcome these regulations. We feel that, it will allow for, different exchanges, of course, but also other, companies in the digital asset space to sort of, shore up their position and ensure the necessary bits are in place, from corporate structure to AML policies to due diligence policies, KYB, KYC policies, and the like. And of course, these are the sort of things that you need to have as a company to prevent the FTX or situation. Not just that, but obviously technical, cybersecurity, and a number of other, policies are required to actually be, to get a license to be able to operate. So, we for one welcome this, and we encourage regulatory bodies, across the continent in Africa to consider, also putting forward a regulatory program so we can begin applying.
Okay, so one other thing we really saw for 2022 was that with that significant volatility, there was also exposure of the vulnerabilities of the crypto asset sector. Give me your top 3 vulnerabilities that you really saw come into play in 2022.
Well, one of the things I've often said is, and in line with what you mentioned earlier, there is a correlation between currencies, what the Fed does with regards to rates and what happens in the cryptocurrency market. Okay, so that just to mention that point. And I think that one of the points which I've kind of echoed over time is everyone wants to be involved in crypto. Nobody has experience, with finance or traditional finance. Ergo, one of the concerns I have had in 2022 is a lot of people sort of rush in the space. Everybody wants to either own a cryptocurrency exchange or some sort of cryptocurrency program without really understanding, the finer points of finance and guardrails which are necessary, to be in place in the visual world.
So
that's just one point. I just feel, people need to be more informed, better educated, and in 2022, FTX being the core example, you saw how someone with very little experience could fail very quickly, or could go from what you could say is a very successful position to a very difficult position overnight. purely based on lack of experience and lack of intuition when it comes to traditional finance. So that's one. The second one I'll probably say is security, cybersecurity. Whilst inherently blockchains can't be hacked, the technology wrapped around it, whether it's your passwords, your access parameters to blockchains or on-chain activity, that can be hacked, right? And that has presented a number of challenges for the industry in 2022. We did see a number of obviously losses, for a number of cryptocurrency and digital asset companies, whether it was through hacking or some sort of cybersecurity leak or whatever it may have been. That I would probably say is my number two concern. And it's something that we all need to be aware of, even ourselves as a company at KoinKoin. We're constantly fending off hackers. We're constantly, looking to bolster our security framework to ensure that we don't suffer, any issues. So that's number two. And I guess number three would be sort of having an understanding, right? There's a need. I think last year, one of the issues we saw is, we could have a number of different issues in one region and the same issues then repeat themselves in another region. I think one of the major concerns is not having that togetherness, a sort of an understanding across borders, across the entire financial world on what we need to do and how we need to make, digital assets and cryptocurrencies safe for everyone. I think there's a need now for there to be some sort of, a hymn sheet which we can all sing from, an understanding of what we need to do, even if it's some of those basics which are currently not in place. I think that would certainly prevent and negate a lot of the negative, outcomes we experienced in 2022.
So let's get to some of the concerns of the regulators, and particularly a few regulators that the rest of the world is also watching. So there are more warnings than ever about cryptos coming from regulators, U.S. regulators, including the Federal Reserve, the Federal Deposit Insurance Corporation, and the Office of the Controller of the Currency issued their first ever joint warning about cryptocurrencies. The watchdogs told financial institutions to be wary of potential fraud, legal uncertainties, and misleading disclosures by digital asset firms. Given what we saw in 2022, do you think this warning is quite warranted? And while it targets financial institutions, there also is a bit of warning there for the retail investor as well.
Yeah, I think this kind of leads into the first point I mentioned earlier, right? So who are the folks running, cryptocurrency platforms or digital asset platforms? How genuine are they, right? It's unfortunate, but yes, there are some scammers. Scammers exist in all forms. And some, unfortunately, we have got some entities who pose as, being authentic, but ultimately are looking to swindle people out of their money. And there's a need to sort of have some understanding, not just by the general public, but generally by everyone, to ensure that, there's an understanding, of not just for the public, but also those who run these platforms. There will be a need for, all of us to be able to present, what we're offering, the services that we're offering in a light such that, retail, users can come back, and obviously query what we're doing and get to a point of comfort, right? I mean, in traditional finance, there's such a thing as being available or certainly offering, a follow the sun service, 24/7 service, and ensuring that, there is a comfortability for the retail user in reaching out, to platforms such as ours and others out there. And I think there's a need for a standard to be set up by which we, obviously all of us would have to adhere to. And I think that's where you sort of, look to see what the regulators, want to do. Now, that said, in the future, when we see more maturity in this space, one thing I'd like to say is that on-chain activity should be self-regulating. Okay, so we will get to that point, but we're not there yet. And a lot of people sort of, talk about this future where Bitcoin or the associated Lightning Network can provide a service which will be self-regulating and self-governing, where the users of the network will provide the governance in and of itself of how it works. And I welcome that. But for the time being, any sort of transition would still have to go through the rails and guardrails which have been built over decades in traditional finance. And the view is we need to sort of go through that process before we eventually get to this
to the self-censorship. Ola, I need to ask, because I found something interesting, that warning from the U.S. Federal Reserve and a number of others, and it was also warning banks about a contagion risk. So we started this asking sort of about how the interest rate hikes that we saw from the U.S. Federal Reserve had a backflow effect on Bitcoin, Ethereum. They basically had an effect on the cryptocurrency space. But a contagion risk is also one that it seems that maybe the issues in the crypto space could spread to the traditional financial system. How likely is that possibility? Are we getting to such a place where there's a level of interconnectivity with more traditional banking systems wanting to play in the space that there could be increased risk of crypto somehow negatively affecting the traditional financial system?
Well, to be honest, there's been several opportunities for that to happen. Okay, we saw a number of different, last year where obviously the FTX saga in and of itself, the interest rate rises, and a number of other activities were very, very clear, where we kind of saw, okay, well, this is what's going on, this is what's happening, and everything that's sort of happening was leading to, perhaps a crash in Bitcoin, but not a crash in anything else. So we had those days whereby it was very obvious that Bitcoin was losing steam and several other altcoins, including Ethereum, of course. But then when you look at the sort of stock market and the general money markets, nothing was happening. So there is maybe a future risk for contagion, but what we've realized is most of the institutional participants in this crypto space have only really exposed a very small part of their portfolios to digital assets. Ergo, they're not seeing a run on their books as you would sort of see on sort of the typical holders of Bitcoin, who were suffering quite a lot because of the loss in value. So there is a risk of contagion, but again, we're not there yet because a lot of the institutional players who got involved, who were heavily involved in the traditional, stock market, money markets, commodities, or what have you, have only really exposed themselves to a very small level to digital assets. Okay. So perhaps in the future, there will be a risk of a contagion, but we're not quite there yet. Again, there's a lot of other things happening in this space. There's talk of a stable coin backed by tangible assets such as gold. I feel that a very big part of the future of money on this planet will revolve around such. Okay. So as we start to see more of that, then perhaps you can start talking about things like contagion between different asset classes led by digital assets. But at the moment, all right, Ola.
Okay, so very quickly, unfortunately, my time is up with you, but I need to ask this because we've seen that the IMF now has recommended that the Financial Stability Board develop a global framework of standards for the regulation of crypto assets to provide a coordinated approach to managing financial stability and market conduct risks that can be consistently applied across jurisdictions. But given the very decentralized nature, the cross-platform sort of situation that crypto has going on, doesn't this really hit at the heart of what makes cryptocurrencies cryptocurrencies? And I need this answer in under a minute.
Well, again, like I said before, there's going to be, because of what we've seen, because of the experience with FTX and the losses a number of people have had to endure, there will be need for doing what we know works, which is handling the problem in the traditional way. Now, this doesn't take away anything from those who are innovating to ensure that future of self-governorship and self-censorship, which Bitcoin in and of itself can provide. But we're not going to get there overnight. We need to do what we know, and the likes of the IMF and all these other central banks and what have you can only apply what they understand. And they're still the gateholders, right? The key holders to finance around the world. So those of us in the digital assets will have to take our cues from them for now. Okay. Let's see how that works out. And then in the future, when we've been able to innovate further, then we'll have the opportunity to perhaps put something in place which will kind of take us away from the traditional way of doing things and perhaps do things better where we have that sort of self-censorship and self-governorship, which I think Bitcoin will provide in the future.
All right, there are more conversations to be had about Bitcoin, of course, cryptocurrency space, and that's a conversation I look forward to having with you throughout this year. Ola Atose, as always, a pleasure. Thank you so much.
Thank you very much, Tolu.
And it's not just the IMF, it's not just U.S. regulators that are warning about cryptocurrencies. The United Nations Conference on Trade and Development outlined the risk and cost of cryptocurrencies to developing nations in 3 policy briefs, suggesting ways to limit their expansion. It detailed how crypto is a potential threat to financial stability, the allocation of capital and resources, and the security of monetary systems within developing countries. Citizens of emerging nations such as Kenya, Venezuela, and India are disproportionately more likely to own digital currency, according to the UNCTAD, with 15 of the top 20 countries with the highest share of digital asset ownership being emerging countries. It called on developing countries to curb crypto advertising and introduce robust regulation of exchanges, digital wallets, and other aspects of decentralized finance. It even suggested banning financial institutions from holding crypto. So while this could be the year of cryptocurrency regulation, it's also likely going to be a year that really defines how cryptocurrency will be able to move forward across the world as well as here on the African continent.